The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. I appreciate you starting your trading day off with me. And boy, it's going to be an interesting one, folks. It's Fed Day. And has there been a recent Fed decision like this one in terms of the volatility, in terms of how difficult it is to predict? In my lifetime, I've never lived through a banking crisis during a blackout period at a time of generational inflation where the Fed can't even tell you what they're thinking in the 2 weeks preceding a meeting that they had basically signaled the last time the chairman spoke 15 days ago. 15 days ago, folks. He was talking about basically potentially going to 50 basis points. The conversation now is, do they even go to 25? Do they pause? It's anyone's guess. We're going to find out at 2 o'clock. The press conference is going to be so interesting at 2:30. And I think the market may be in for a wake-up, man, because we're going to talk to our man Kevin Hincks at 9:15, as we always do. He had some great points yesterday saying, listen, the chairman's going to say they can do both. What I'm going to ask him is, can he do both, right? Can he do both? And what's the market going to say if he really comes to say he's going to do both? Because the banking crisis is its own deal, folks, and it keeps going. First Republic, I mean, check it out, man. You talk about a trade. Last night, you traded at 1 o'clock yesterday from almost, let's get the exact high, 1944. You closed at around, 1577. And by 6 o'clock at night, when the news started coming out that the U.S. may have to backstop any type of deal for First Republic, you were down to under $13. Folks, First Republic just traded from 19 to 13. You jump over to the Analyze tab. We jump over to the Fundamentals tab on the Thinkorswim platform. You scroll down. And this company is a $3 billion company, folks, and you are chopping around where it's giving back 30 to 40% in a few hours left and right. That is some volatility. So don't think it's over just yet, folks. And so thinking a little big picture here, what's the Fed going to do? I'm just jumping around some banks. JP Morgan up a little bit today. We'll back to the S&P, basically sitting flat. Quite a charge higher yesterday from about 2 o'clock. You traded from 4,010 up to 4,043. You talk about a surge, man. End of the day yesterday, 5-minute bars. Boy, you talk about a rocket ship up to 4,043. So just thinking about putting yourself in Chairman Powell's position, right? We're going to start getting numbers for March pretty quickly, folks, as in, we'll wrap things up in the next 2 weeks. And just like that, we're going to be getting all the March data, just like we've been getting the February data. And I don't see the banking crisis squashing the pockets of inflation that have persisted. Okay, what do we always hear about? We hear about services. And we'll jump to the charts, but it's important to think a little bit of big picture because this is what Chairman Powell is trying to do. Nobody has all the answers here, folks, okay? We've seen that in the last year or two. So don't think that you can't make decisions, okay, in terms of where this may be going, and that somehow the chairman has a level of information that would make his decisions far superior to yours, because we've seen that's not the case in the last year or two. So put yourself in his position, right? You think a little bit big picture. You say to yourself, okay, we have some issues here. Let's start it off with the headline. The Fed is caught between inflation and a banking crisis. That's the truth, man, and that's what makes things so dicey, okay? So you have multiple scenarios, right? The scenario number one is they say the banking crisis is really a worry. We're going to pause. It's plausible. It's reasonable. That doesn't mean they're done hiking. That could just mean that maybe they pause, they let the lag catch up. You go out to the next meeting, the next 6 weeks or so. The meetings are about 6 weeks apart. And you let things sort themselves out without putting more pressure on the system. And then maybe you go data dependent and you can hike in 6 weeks. I don't think this banking crisis, okay, is going to squash inflation like the chairman wants it to. And I think they can do both because the pockets of inflation, folks, are where, right? Services. I don't feel like the banking crisis is really going to put a hurt in the services sector. in the way that you're seeing the headlines. Now, it's going to tighten, man. It's going to tighten in a big way, right? These banks, they're going to want to shore up their capital. They're going to have greater capital lending requirements just across the board. It makes sense. But that's not necessarily going to hit the services sector when you got wages. The last wages we got, folks, I think it was the ADP that came out for the month of February. 7% wage increases if you're in the same job, 14% wage increases if you change jobs. Now, when interest rates rise, you hit everybody. Okay, you hit mortgages, you hit car loans, right? You hit the cost of capital. Now, the cost of capital is going to go up when the banks tighten, okay, to a degree. But I feel like where we are in inflation, it'd be too much of a gamble right now to say, hey, the problem going on with these regional banks right now is enough for us to ease up on the inflation battle because, man, I mean, you got to remember those speeches from Chairman Powell, man. Sometimes he led off his speech, folks, with saying it hurts the people that can't afford it the most, right? Trying to speak to the American people, trying to speak to savers that were getting crushed the most, okay? And boy, if he makes a pivot, man, I don't know what the market's going to do in terms of inflation just raging and the Fed saying that regional banks are going to cause them to ease up on the pedal. I just don't see it happening. Okay, so be careful in this market, man. We might get a real wake up where the chairman says, listen, we're dealing with the banks, okay, but this banking issue is not going to crush inflation. It's not going to happen on its own. And we're going to stay consistent in what we've said. We're going to be data dependent. I'm sure you'll hear that one because we're going to have a lot of data coming down the line. And boy, the moment they think that they can, they might start to pause things. But that's not what the chairman thinks about inflation, folks, okay? So if you want what he thinks about inflation, you go back to where he was talking in this market on, let's back it up, 20-day hourly. And there is the speech, March 7th, 15 days ago, when he appeared in front of Congress. We're almost right back up to that level. His views of inflation have not changed, folks. There's been no data in the last 15 days that have made the chairman look at the data and say that inflation has gone away. There's been a tremendous amount of data from the banking sector causing them to realize that banks are under extreme pressure because of the pace that they've been raising interest rates. But inflation is right where it was when he said, March 7th, we're going to have to be higher than the market expected, okay? So keep it in mind, man, I don't know how you're going to see a shift there because nothing's changed with inflation. That would just be hoping that somehow this banking crisis is going to tighten up the economy to the point that it's going to squash the pockets of inflation that exist. And folks, the pockets of inflation that exist might not be the ones that get squashed from the crisis in the banking sector going on. And don't get me wrong, I know it hits everybody, right? We know that these banks, man, are nervous about their balance sheets, and that's going to result in them tightening up. But I just don't see the chairman. I mean, you got to look at things from a legacy perspective at this point, man. Chairman Powell, we're dealing with generational inflation. They're going to be teaching this one in the history books. He's no fool. He knows it, okay? Do you want to be known as the guy that allowed a banking crisis to develop, which allowed you to make a dramatic error in your battle against inflation, and it allowed inflation to roar back? I mean, just do the math, right? Versus, I think they have the ability to fight both. I think you're going to see a hike, and I think you're going to see some pretty strong language that, guess what? Inflation is still here. We still have to deal with it, and we can do both. We're going to come back. We'll talk to our man, Kevin Hincks. S&P's up by 1. Market pretty flat, waiting for 2 o'clock today. Stay tuned, folks. Talking to our man, Teddy Kegstad, at 40 past the hour as well. Great program. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now up by 1 point. NASDAQ 100, we'll call it flat. Dow up by 29. Let's jump over to our man, Kevin Hincks. Every trading day, folks, right here on Tiger TV, the TD Ameritrade Network at 12 noon Eastern Time. Fast Market with your host, Kevin Hincks, Tom White. Quite an important day as we got a Fed decision at 2 o'clock. Kevin Hincks, I'm going to ask you an easy question. Not so easy, actually. What's going to happen at 2 o'clock today, my man?
Good morning, Tommy O'Brien. Jerome Powell's going to raise interest rates by 25 basis points, and then he's going to come out and say, in my opinion, that we can walk and chew gum at the same time. We can deal with inflation, banking crisis that is now dissipating because the whole banking industry as a whole, the FDIC, other banks, they all stepped up. And I believe, Tommy, that he's going to say, we can do several things. They're related, but they're also very different. And all you have to do is look at the UK, this AI data. Even with all the work they're doing, I mean, so I think the CME FedWatch tool is now at 90.8. Announcement, pretty easy.
Pretty cool. And I'm in the Tiger's Den, Kevin. They're talking about, of course, the banks this morning. I have a chart of SoFi up here. So SoFi, they got a couple things. They're guaranteeing up to $2 million in FDIC insurance already. That stock up from about $560 to $590. Their CEO's been buying some equities. It's interesting. First Republic making some headlines, of course, overnight. Maybe the U.S. government potentially going to add some type of backstop as it still plays out. But markets sitting pretty lofty, man, from where we were in the last couple of days. If they go where you think, Kevin, and this is the real kicker, right? And I agree with what you're saying, man. They got to do both, right? I was talking about at the beginning of the program. I'm not sure how you ease up on inflation when really you haven't seen anything in that data since the chairman spoke to Congress. Boy, we have a banking crisis that developed, but really that hasn't been data with inflation. We could just think that maybe that does help things, but the chairman talks about data dependent. What do you think the market will do, Kevin, if the chairman does come out and say, hey, we're still on this inflation kick, man. We're still going 25 basis points. Do you have any idea how the market, that's the best kicker, I think, in what we've been doing recently with the market, and I'm saying recently, the last 2 or 3 years, is sometimes if you actually know what the Fed would do, it's very difficult to even understand what the market does after it. What are you looking for potentially from the market, Kevin, if we get some of the statements, which I agree with, man, the chairman may bring, that they're going to try and do both right now? How do you perceive the market may react as we're sitting above 4,000 right now on the S&P?
In the comments, comment section and the Q&A is going to be vital for what he sees. Because remember, we went through this whole banking crisis during a Fed quiet period. So Jerome Powell's going to come quiet to real loud and I think we're going to get a real picture. Do I think the market's going to be volatile? Yes, I do. I think these markets will move. They'll swing on every sentence, every phrase that he says. Where it'll end the day, Tommy? No, it all depends about the picture that he paints going forward in terms of fighting him. Remember, we're 4 times a year we get new dot plots, so we'll get interesting as other FOMC members put is the path of rates. We'll get that, react to some of that, but you're real out. 1 minute intervals are going to be met.
And what do you think, Kevin? Sorry, you were breaking up there a little bit. I was just going to jump in and say, what do you? And this is all our opinions. That's the best part of being a trader, folks. Kevin's talked about it many times. You have to have your opinions, right? And then what I love watching your program, Fast Market, about, Kevin, is that you allow the listeners and the viewers to make their own opinions, and then you teach them the best way potentially to set up a trade, manage that trade, using options, using defined risk. But you got to have some analysis on your own, folks, when you're making those trades. Otherwise, the market is just priced for events and the probabilities that occur. Kevin, do you think that they can do both? As I'm trying to do this in my head, right, the gymnastics, and I say, okay, we have a banking crisis, but the pockets of inflation that are raging here, I'm not so sure. A banking crisis like the services sector, is what's happening with First Republic. Now, we know it's going to tighten up lending to some degree, but the pockets of inflation, I find it really difficult for the chairman to ease up when those pockets are existing, and they might not get squashed by what's going on, at least to the degree they need to. What do you think? Let's say they do. Is this something that's going to add to the banking crisis? Is this something that as they ramp thing up? How do you think about that scenario as we go forward if the Fed really does, which I think they should, keep inflation kind of front and center right now at least?
Yeah, for the people that are saying that Jerome Powell caused the problems in SVB, they just don't understand risk, right? SVB didn't hedge their risk. And if you didn't think that interest rates could go up during this environment, then you weren't looking at the risk in the right way. And so they had way too much risk that normal, big, larger cap banks don't have. So listen, I think Jerome Powell has 2 mandates: to fight inflation and to keep full employment. He's got one of those. He's working on the other one. He can service the banks. Like I said, they can do 2 things at once. They can help the banks while fighting inflation. So I think that's what he'll come out and say today. How the market takes that, Tommy, I have no idea. But I think Jerome Powell will give, like I said, a walk and chew gum theme to his talk today.
And folks, humility, very important in the market. Never think you know more than the market, man. I think we've all got a lesson the last 2 or 3 years, no matter what you think is going to happen. And you talk about years, let alone what's going to happen in the next couple of weeks, man. Chairman Powell, he was talking 15 days ago, Kevin, in front of Congress, where he let us know it was going to be higher than we thought. And boy, it's been quite a 15 days in this market, as we know. With that in mind, Kevin, important day macro-wise, but what are you guys talking about coming up on Fast Market at 12 today?
It's late in earnings season, Tommy, but we got 3 good names to talk about today. KB Homes, remember what's going on in housing right now? Housing is on fire right now, Tommy, with these lower interest rates that have spiked lower. You see it in the housing data. You see it in mortgage apps. So we'll do KB Homes. They have earnings coming out after the bell. Like Folio do a presentation on Chewy, the online pet food supply, and then Darden Restaurants. good old Olive Garden that we'll look at. So 3 good names today, all with earnings either out after the bell today or tomorrow morning.
Pretty cool, man, in the context of we still got action in equities and, the real estate sector, man. One of the headlines I had pulled up here, Kevin, that I'm going to talk about in the program, 30-year mortgage rate falls to a 5-week low of 6.48%.
6.48, yeah.
Yeah, that's kind of the area that gives me pause. I say, see headlines like that. How is the chairman going to really back off right now when you put the inflation numbers up there? Pretty lofty. Kevin, I appreciate the time, man. Mornings don't get much busier than Fed Day, as always, and we'll be watching at 12 o'clock today, man. We'll talk to you tomorrow.
Have a great day, Tommy.
You too. Folks, tune in. It's going to be a good one, I imagine, today. And, 3 great stocks, man. You check out KB Homes, right? Boy, if inflation persists, folks, my dad's been talking about it on his program, hard assets. You saw gold. Now, gold, a little bit of a different scenario during the banking crisis in terms of gold really accelerates, of course, as the banks are potentially collapsing. But, boy, hard assets, folks, you're seeing it. You're seeing it right now play out in these home builders. And they're talking about Chewy, right? They'll be talking about Darden Restaurants, Olive Garden. Look at that chart from Olive Garden, man. Services sector. It's going to be an interesting Wednesday, folks. Stay tuned. We're coming back for the opening bell. S&P is positive by 1. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay. Okay, welcome back, folks. We got markets open, and we got the S&P flat on the open. Pretty interesting, right? You come into it. And how about SoFi? So interesting action out here. You got to get in the Tiger's Den if you're not in the den, folks. I appreciate our man Fletch putting it in there. And yeah, check out SoFi. So you're up 4.1%. You jumped to $6. That's from a low of 518 on Monday. And this has been talked about in terms of what you can do in terms of banks, but I don't understand the fundamentals enough in terms of how it's happening right now, how it's happening, what it's costing the bank, et cetera, because it seems like any bank should be doing this, right? Maybe they just don't have the capital. Maybe that's the hedge aspect of what Kevin's talking about out there. And we're jumping around, but folks, check out Fast Market. Any of the programs we do, the host. But Kevin's point there, talking about to those not in the market, right? It's very easy to blame the chairman for what's happened to some of the banks, Silicon Valley. But if you're in the market, man, if you're in the den, all right, if you know that they parked almost $100 billion at 1+% and didn't think about the impact that if they never needed to access that money before 10 plus years when it was set in there, that they might have to take a capital hit. If they didn't think that maybe it might be advantageous to hedge that type of a risk that they were facing with rates, if they didn't think it was a good idea to have a chief risk officer in place at a time when their balance sheet was deteriorating magnificently, okay? But here you see what's happening. So SoFi checking and savings accounts to offer access to up to $2 million in FDIC insurance. Now, it's so interesting how this is going to play out. And this news is just hitting. You're seeing SoFi trade. All right, market's deteriorating a bit on the open, S&P off by 4. So you're going to have to click this, actually, in terms of you have to actually opt in, which is interesting. SoFi members will be able to opt in to increased FDIC insurance through the SoFi app or website with one click. New members will have the opportunity to enroll when completing their sign up for checking and savings. Seems like SoFi probably is going to be paying for it if they're not just giving it to everybody and they're making you click a button, right? But they have award-winning. Yeah, this is their PR out here, okay? This is basically their press release, I think, that's getting picked up right away. It was on Yahoo Finance. It's out there in some of the news out there. But they do. SoFi's got great rates, man. They're one of the areas where people, right, taking money away from the big banks, putting it into some of these higher-earning CDs or savings accounts. But yeah, this stock is skyrocketing. They've been in the news recently. Their CEO buying some shares. You take a look at a longer-term chart, and yeah, you get down to 5 from 8. You back it up, though. We were at a price of $422 coming into the year right now from a high of $1057, but you back it up beyond that, and you're talking about, man, in 2021, $28.26. It's been a run to $4. You're catching a bid today. But don't park your whole account on this thing, to put it lightly, as in, yeah, there's some volatility for you, but encouraging news. You'll probably see it happen more often. And if anybody in the den has, I know our man Jimmy was talking about some of those aspects in terms of FDIC insurance, the banks, the ability to insure it over time. And if anybody knows how that plays out, because why aren't more banks doing this, right? Is it just a straight up cost analysis in terms of making sure that you're paying for the insurance of those funds over $250? It could be. Let's see what this says here. Funds participating in the SoFi FDIC insurance network, this is what they're using to get up to $2 million, are deposited into deposit accounts at participating banks where are insured by the FDIC for up to $250,000 for each category, including any other balances you may hold directly. The total amount of FDIC insurance for your account under this program is limited to $2 million. So what are they doing? They're probably taking your money and they're parking it at other banks for you, it sounds like. To ensure your FDIC coverage, regularly review banks in which your funds have been deposited and reduce your balance at other participating banks to retain full insurance coverage. Somebody should have told Roku that, man. Yeah. Pretty cool, though. You're seeing a lift there. Now, you want to talk about not cool. How about this one? First Republic. What time was this out at? Last night, right? Yeah. March 21st, last night at about 6 o'clock. They updated it this morning. First Republic Rescue may rely on U.S. backing to reach a deal. Yeah. I mean, that's what had to happen with Credit Suisse. I'm not sure this is Credit Suisse. It's not a global systematic bank like Credit Suisse is. But Wall Street's very worried about this bank, man. And maybe they just don't want to have another one fail, and they're doing everything they can. But right here, the government could play a role in lifting assets out of First Republic that have eroded its balance sheet. Investors have expressed interest in helping. The firm's unrealized losses have been a sticking point. Go figure. That's the only. What else is going to be the sticking point? That's the sticking point in the whole banking crisis right now, right? Additional ideas have included offering liability protection. It's almost basically what they were doing on Credit Suisse, right? You backstop the losses, applying capital rules more flexibly. That seems like a disaster going forward. Or easing limits on ownership stakes in terms of what you can do in terms of who owns banks, etc. So that news comes out last night. Didn't jitter the market too much, but it did jitter First Republic, as we talked about in the beginning of the program. Boy, you talk about a drop-off, man. Look at this. 222, you're flirting with $14, $10. This thing was just trading at $122. That's a weekly. You put it back on a daily, you drop out of bed to basically nothing, folks. So be careful on this one, as it does not look good. Down another 6% today. You were trading at $19 yesterday at 1 o'clock. You're trading at $15 right now. You were at $13 last night, and you were at $13.50 early Tuesday morning. Man, dicey action. All right, let's jump around to some other headlines I had pulled up here. I mean, it's going to be Fed Day, folks. Not really a lot of action, I imagine, until 2 o'clock. But this is interesting times, man, because what I was going to say, you pause, right? It's like the banking crisis is unfolding in front of our eyes right now as we speak. And meanwhile, we have a Fed decision at 2 o'clock. I mean, what if things are moving so quickly that there have to be headlines for First Republic? What if a deal is done today? I don't know that they do that right ahead of the Fed decision. They might have to, depending on how bad things are. Remember, Credit Suisse, okay? Excuse me. The news comes out now. Credit Suisse, they knew the writing was on the wall for Credit Suisse last Thursday when the government came out and gave them a $50 billion backstop. That's last Thursday. They knew it. So don't think you know everything, man. There might be things going on behind the wall. And when you start seeing that the government might have to backstop their losses to have any type of a buyer, that might be the writing on the wall for First Republic, man. And just looking at the chart, it seems like the writing is on the wall. You're down another 6% today. You're basically flirting with the lows that this thing is at, down from 120 this month, down from 220 last year. It's going to be a wild one, folks. That is to say the least. All right, what do we got? Let's see. We talked about interest rates, right? And this is kind of where my head goes in terms of, can the chairman pause? Folks, if you start seeing the chairman pause and talk about cutting, and you start seeing consumers get the idea that they're going to start being able to buy a house because mortgage rates are dropping, right? Things are becoming cheaper. Cars are becoming cheaper again for interest rates are going down. Just walk your head through that. And I think right away it's like, nope, can't do that. If I'm the chairman, can't do that. Cannot even think about cutting right now. I'm not going to be bringing down mortgage rates. I'm not going to be bringing down lending rates for consumers at a time when consumers in the services sector are just crushing inflation. Not going to happen, because these are the types of headlines we're already seeing. Mortgage rates are plummeting. 5-week low, 6.48%. Biggest weekly drop in 4 months. That's not the headline that's going to cause people to tighten up in this economy, folks. But no matter what, we find out at 2 o'clock. Everything is just opinions and hearsay until 2 o'clock. But we're going to get some more opinions. We're going to talk to our man, Teddy Kegstead. Coming up next, folks, we'll talk some Forex, we'll talk some commodities, we'll talk some Fed. Don't go away. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps right now, negative by about 4 points, trading at 4,031. Let's jump over to our man, Teddy Kegstad, folks. We talk to Teddy every Wednesday at 40 past the hour. You can check out Teddy's Tiger Forex report, folks. He puts out a new issue every Monday morning. He has updates throughout the week. When warranted, when you sign up for Teddy's service, folks, you can access it under the newsletter tab at TFNN. You can subscribe for $97 a month. And folks, basically, that's 29 days that you get to try out this newsletter. It comes with a 30-day money-back guarantee. If you don't like it, just let us know. You get a refund. You get the newsletter for 29 days. You gain access to his webinar, Forex Strategies and Fundamentals, What's Behind the Tiger Forex Report newsletter. And like we always say, man, it's an especially interesting time, to put it lightly, in the Forex market. Teddy Kegstad, good morning.
Good morning, Tommy. First, I want to extend my condolences to David White's family and to you guys on your loss recently.
I appreciate it, man. You know, it's he's been around for almost decades, which is remarkable, Teddy, and a young guy, and it's with us all for a little while, to put it lightly. And I appreciate it, man. You know, it's boy, life sometimes, man. Yeah, I struggle with the words, but I appreciate it, man. We didn't talk to you last Wednesday. I had some technical issues, I think, man. We haven't talked to you in a couple weeks. It's been quite a couple weeks in this market, Teddy. We talked to you on a very important day. I love that we talked to you on Wednesdays, man, because usually we got some good action going on. Where do you want to kick things off in this market, Teddy?
Well, it's Fed Day, so the next couple hours is going to be a ho-hum trade, I would think. I wouldn't have any big expectations until later. But we have, what a storm we have brewing. You have inflation running in the UK that blew out expectations, at over 10%. Yeah. So, which is something that we've been talking about for a while, that their numbers are not getting better. They're only getting worse, So that's going to have a big impact. And we had the pound that spiked high today. I'm surprised that they're not selling off much more than they have. But I think a lot of that might be because it's Fed Day. Now we're coming into that window where until 2 o'clock our time, 1:15 Chicago time, we're not going to know anything, So now here comes the big question is, what are they going to do? Well, I would say that they can't end their resolve. I mean, the way we were looking before this banking crisis started 2 weeks ago was that, we went from having them supposedly stopping raising to possibly cutting at the end of the year to having now all of a sudden 0.5 and 3/4 point raises for the rest of the year. So I think that you're probably going to see today is a 1/4 point raise. I would be really shocked if they didn't do anything because that sends really mixed signals. The reality is that they have to keep with their program just for them to, I think, even show faith in the banking industry as it is. I mean, that's a whole nother ball of wax. I mean, when you look at how this started, SVB, what's the irony of it all is one of the guys that was the top guys at Lehman Brothers is one of the top guys there. So this is a do-over, So, and it also shows that the compliance at the highest part of the banking level is atrocious in this country. I mean, the fact that banks have zero reserves when they should be functioning on at least 10%, and the fact that they were allowed to run at that, and then the way what bank wasn't liquidating their bond portfolios a year ago when they knew the Fed was going to be raising rates for a year? We've had the most transparent Fed in U.S. history, or at least in my lifetime, and how could you make that mistake? You're either the biggest idiot in the world, or you're just stealing and you're just not, you don't really care about what you're doing.
That's why I love talking to you, man, because I agree. People get, I'm not sure if you heard Kevin Hincks saying, it's just to not hedge that, man. And, there's all this rhetoric, and I feel like it gets played out in not even the financial media, man, like the mainstream media, and that's a bad term in my mind. But, talking about NBC Nightly News where you just get the headlines. And yeah, it's like, oh, rates have risen and the banks are in trouble. It's like, man, if you know what's going on, it's like this bank was ridiculous. It's like I wouldn't, Teddy, I joke, my mom's retired. She's in her 60s. And I said, I couldn't myself be a proponent. Of course, she has some fixed income, but why were you buying 1% yield, long duration, man? Right. Even as a retiree, I'm like, what if you need that money, let alone being a bank and doing it with $100 billion and not hedging your risk? It's like, come on, man.
Exactly.
So, and I agree. It's like I was trying to do these gymnastics, and last night I finally got to it where I said he can't pause, man, because there's no way that this banking crisis alone, folks, is enough conviction to squash inflation. And maybe it helps, okay, and maybe it does, but you just can't make that leap, I think, in the chairman's role with where we are, because we haven't gotten a lot of inflation data really since he spoke 2 weeks ago. We've gotten the banking crisis, but the inflation data has to come, man, before I think he can make that leap. Which is, man, oh, man, we're going to get to find out. Now, where do you see?
I think that this is really actually going to impact the interest rates for a while, too, because think about this. If banks are all functioning on zero, they have no reserves. That means they can't borrow money from the Fed when they issue loans. How are they going to be lending to people in a mortgage market where rates are going higher and you're already having an issue getting them financed? So, definitely. But this is going to affect the dollar too. So as long as they stay on the path that let's remove the banking crisis and go back to our theory that we were on before, for the past couple of months. If they remain on the hiking basis, I think the dollar is going to stay firm. I wouldn't say it's very bullish. Now, we've been talking about divergence in the markets already for a while, and you can see it's very representative. Where the dollar index right now, a lot of the lift where it's fallen back recently was because of the rally in the euro and the pound. Okay, if you look at a lot of the other currencies, they're very sideways. I mean, you look at the U.S. dollar, Canada, even though it made some new weekly and monthly highs recently, it's still in a very big, wide range trade for the past 6-7 months. Nice. So, I mean, like, and that's a perspective I think people really need to start to look at. And I think we're going to still see this over the next couple of months, because now we have so many variables globally, financially, economic, it's almost like, how are you going to establish a true trend? So I think the long-term trends that are in place are going to stay somewhat together. The intermediate term, you're going to see, I think, more of a directionless trade, and you're going to have a lot of short-term moves, but and short-lived as well. So I think that people have to be very cognizant of that. I'm not saying volatility is going down, but you can have high volatility and the market really doesn't go anywhere, Yes. So, I mean, and that's something I think we have to really pay attention to, especially, when you look at a lot of the commodity markets and stuff like that as well, because, what people don't realize is, right now, the Fed is buying back these assets from the banks, and the irony is they're not even buying them at the market price. They're buying them at the prices that these banks bought them at. So that's a huge loss. So that's also a big liquidity factor. It's going to start being you're adding lots of liquidity in one direction, but it's really, really going to draw out liquidity because these guys are going to be under the gun now. Do you think that they're going to be able to just be speculating and entering the markets and the derivatives markets like they've been doing? Absolutely not. They didn't hedge themselves what they were supposed to do. We know that they were definitely double leveraged on certain things where they were actually gambling, So, and that's going to be, I think, for volume in a lot of markets, it's going to start to tighten up in a big way.
Yeah, it would have been pretty interesting to see some of the CEOs of these big banks watching. You think we're watching Chairman Powell's press conferences with interest, folks. Nobody had any idea how important these banks were watching probably those press conferences, hoping for a pause or a pivot that they just never got, man, and they just didn't hedge. And great point about the market. Just look at the S&P from where we were. Pretty interesting, Teddy. We're basically right back to where we were when Chairman Powell spoke 15 days ago at about 4,040, 4,080. Meanwhile, we were approaching almost 3,800 in this market. So, yeah, right back to where we are. And you're talking about 5% swings. Can you hang with us, Teddy, for a few minutes?
Sure.
Okay, we'll finish up the program, folks. We got a few more things to talk about.
Good.
I want to talk about yields, interest rates as we go forward. We'll be right back with Teddy. Stay tuned, folks.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We're talking to our man Teddy Kegstad. Please check out the Tiger Forex report, folks. I got a chart of the 10-year up here, Teddy, but I just want to talk a little bit about the general idea of where you think maybe rates may go. I know you look at the 30-year very well in the Tiger Forex report. Everybody's interested in rates. Quite the moves we've had recently. If the Fed goes 25, I know things can change a lot. But where do you see interest rates going from here? Do you see that number rising? Does the banking crisis kind of put a halt on it no matter what the Fed is doing in the interim? Or where do you see, quite the volatile market, to say the least?
Sure. Okay. Well, the rally that we've seen started 2 weeks ago. And it started when the SVB first came to light, okay? And the bonds really rallied off that swing. That swing low was locked pretty hard. And since then, it's gone nothing but higher and higher and higher. I mean, you had a $12 rally in the course of only a week and a half.
Wow.
And this was not because of any Fed number or anything like that. This is when I remember when it first came out, that weekend, people are like, oh, here's another bank. I'm like, this is not just one bank. This is system-wide. And they're like, why can you can't just be that presumptuous on that. I'm like, the bonds made a move like that. This is big money. The big money knows what's going on. You don't have a bond move like we've had like that. So that being said, even if the Fed doesn't do anything today, I think you're going to see yields going up because this has been an over-exacerbated rally. It was flight to quality. Now things are calming down. So unless things get worse, see, I mean, that's the reality. Either things are going to get worse and we're going to be like, oh, my God, this is such a huge problem, which they're going to cover this up and try and keep this subdued as much as they can, you know. And if that's the case, well, then the market has to go. Even if they don't raise rates, the pricing should be lower, meaning yields should be higher. And if they raise a quarter point or more, well, then that low from a couple weeks ago, I mean, look out, baby. We're taking that thing out because the expectations will be that the Fed is still going to keep doing that.
Yeah. We get to find out at 2 o'clock, man. Quite an interesting market. Teddy,
and that's good for the dollar, too. Sorry, real quickly.
No, I like it, man. Good for the dollar as well. Listen, I appreciate the time as always, man. Doesn't get much busier than Fed Day. Please, folks, right now, head on over to the front page of TFNN. Hit the newsletter tab. Try out the Tiger Forex report. 30 days, money back guarantee. It's a great time to do it. Teddy, man, I appreciate it. You have a great day.
Tommy.
I'll talk to you next Wednesday, brother.
Sounds great.
Folks, stay tuned. We got our man Basil Chapman coming up next. It's going to be a great day in the markets, folks. It's Fed Day. Don't go away. Thanks so much. Have a great day, everybody.